Hey there, it's Waylon Corco, your friendly loan officer. Just wanted to record a video today just to kind of talk about some of the loan programs that are out there. Obviously, there's a lot of options. So we really like to go through those. And generally, I'd recommend meeting with your loan officer to really figure out what works best for you. But the first program that you hear a lot about is a conventional loan program. Generally, that would be anywhere from 3% down all the way up to as much as you want to put down. So if you put down at least 20%, you would avoid mortgage insurance. If you put down, 3%, the mortgage insurance will be a little higher. If you put down 5% and then 10%, 15%, it subsequently drops down. And that 20% down, it actually falls off. So that's how conventional financing works. There's usually not a lot of, it's not very strict around the appraisal per se. Like it's not going to get into the details as far as like little things that maybe some of the other loan programs would such as FHA. So I'll talk about FHA. Really, with FHA, you can get into a home for as little as 3.5% down. You can put down obviously as much as you want as well. The thing about FHA is it does have mortgage insurance that would actually stay on there for 30 years if you're putting down 10% or less. If you put down more than 10%, it'll actually stay on there for 11 years. So just something to be mindful there. FHA does also have a funding fee that gets financed into the loan, so it's nothing out of your pocket up front, but it does get financed in and something to think about there. The nice thing about FHA is generally the rates are a little bit lower than conventional, so but you are kind of paying for it with that funding fee, so something to think about. Rural development would be the third program that I want to talk about. Rural development's available in some of the rural areas here in South Dakota. Basically, it's anything outside of Sioux Falls and Rapid for the most part, but there are maps out there online that you can look up that you can search for a property, see if it's within the eligibility guidelines as far as the area for rural development. Rural development can be very nice because it allows 100% financing. So you potentially would have no money into the program. The other thing is it does have mortgage insurance, but it's much less. And that mortgage insurance, it does stay on there for the life of the loan. So that's something to also think about. But it could be the right program for the right person. And then the last program that I want to talk about is our VA loan program. Veterans, I really love helping veterans and kind of working through this program, but there's a ton of options there for a veteran. Essentially, you have the possibility of 100% financing. VA does not require mortgage insurance, so there's nothing to worry about there. There's not any income limits. There's not a cap on how much you can borrow. Basically, it's going to go off of your debt to income ratio and things like that. So each loan program is a little bit different, but I wanted to kind of talk about all four of them at a high level. Generally, when I'm meeting with somebody during consultation, I'll kind of walk through the four and I'll explain why one might be better in their situation versus the other. But ultimately, it is your decision, and so you should be educated on which programs are available to you. So if you ever have any questions, feel free to call or text at 605 360 6966. Thanks and have a great day.